Prometheus Capital. This channel is for documenting my real trading journey, learning the markets together, analyzing setups, providing my honest P&L transparency. I'm not an expert, I'm learning as I go. And this channel is a way to grow, get disciplined, and build a community of traders who want to improve with me. Over the net account value, P&L, position list. Right now the accounts are on $124. So after a rough few weeks where it took several bad option trades, mostly due to timing and not having a clear system. I want to show this because most traders online hide this reality, but the truth is beginners go through drawdowns. The key thing is learning from each mistake, building discipline. If you look over at the account, we were doing well at one point. We were as high as 4,919. We were doing well on calls on AMD, MU, Apple. Then we got to some higher risk, shorter term options. So we're trying to get back. Next week, our plan is to get into Ford and Treasury bond. All right, so let's talk about next week. 2 areas I want to focus on. Ford calls. Looking at Ford because it's been consolidating. Options are cheap, and we have a clean 6-10 week time frame. Treasury bonds, got TLT or TMF. These have been dropping, but we're reaching a potential reversal zone where bonds can bounce. Calls here can pay well if yields pull back. The goal is not to gamble, it's to take 1 or 2 high probability trades each week based on real analysis and price structure. 10-year Treasury yield is the most important interest rate in the world. Right now we're sitting around 4.5%, off a move from roughly 4.1% a few days ago. When the yield goes up, it means borrowing costs rise and the market gets more cautious. When it falls, tech stocks and growth stocks usually get a boost. Key levels I'm watching are 4.2% and 4%, which is major support. Break below 3.9% will flip the market into a more risk-on environment. All right, let's look next at the 2-year. Now we move on to 2-year yield at about 3.6%. This one reacts faster to Federal Reserve expectations. If the 2-year drops faster than a 10-year, that usually means the market's expecting rate cuts sooner. If the 2-year spikes, it means the Fed is expecting to stay aggressive. Right now, the 2-year is trending lower from the 3.9% area, which signals the market is starting to price in softer Fed policy. So now let's look at the TLT. Finally, here's TLT. It's basically the price of long-term U.S. bonds. Moves opposite to yields. When yields rise, TLT falls, and when yields fall, TLT rises. Pulling around 88.80 near its support zone in the 88 to 89 area. A pushback above 91 would signal strength and usually correspond to yields dropping. This chart is great because it shows the same story as the yields, but in price form. When TLT starts moving up, it often means the broader stock market is preparing for a more bullish environment. That wraps up today's market breakdown. If you find any of this helpful, do me a favor, hit the like button, subscribe, and drop a comment so I know you want more of these videos. I'll be dropping more analysis videos over the weekend, covering sector rotations, bond movements, and any setups that start forming going into Monday. If you caught this first video, you're at the very beginning. It's exciting. I hope that you come with me on this journey. And next week's going to be a big one. I'll be actively trading Ford as well as Treasury call and put setups. I'll be documenting everything in real time. You'll see the entries, exits, reasoning, and the results, so we can grow and learn together as traders. So stay tuned. More content is coming, and I appreciate every one of you watching my first video.